I've got my biggest loss have been on SPX. I've gotten clapped bad
Oh
on
yeah, that was my
SPX.
biggest loss too. It
Yeah.
was like 33K, I think.
Trying to short a top that lasted 2 days. That shit crushed me. To
Really?
back to yeah. Yeah. And I was doing, and the worst is I was doing credit spreads. So you're risking after you hit those short strikes the max amount if you're not careful with it. So I got crushed like the first day, and then the next day I'm like, all right, this is where the melt up's gonna end. And I tripled down on it, and it didn't go good. It was definitely five figures.
Fuck,
I'll
I
never
wish I
do it
would have
again
done
though.
that.
Ever.
Mine was so fast. It was, I mean, it was like a matter of, 5 minutes, and then it bounced back and fucking just ran all day after that. So if I would have doubled, tripled down, I would have fucking made bank, but it was scary.
You know, you gotta you gotta learn how to sit in the cockpit when you're trading SPX.
Yeah. Yeah, it's what matters though is how much you put into your position too, right? Like, because you can get, if you're leveraging a huge position on that thing, you can get yourself into a position where there's no coming back. So like it can just wipe out, 20, 30K in a matter of seconds, and there's no saving it. So it can get scary. Um, fuck, I just forgot what I was gonna say. Shit. Oh, I was gonna show you guys what an addition to. So now you guys have the golden pocket down, and that zone, and the general idea of it. There's take this flow index off. There's a kicker you can add to it. I think that's it. That's basically what I like to use for like high probability. Like when I know that it touches this, I know that it's going to trigger bullish, and that's adding a 67% to your charts. So I don't know how often you guys have drawn the fibs, the retraces, and had it come up short at all, and just wondered, if there was nothing there or why did it do that. But there's a very high probability entry at 67% that gets used often, and I recommend adding it to your charts on there. Make sense? Simple thing I just forgot to tell you guys last couple of weeks. I almost forgot right now. The other thing I was gonna say is this morning after the fact, like I didn't look at the whole picture, like this fib that I just measured out from the previous day that didn't invalidate. So it was still legit, like all the way through the morning. And I completely didn't pay attention to it. And that's important. That's something we didn't talk about as far as just we monitor the intraday fibs and we do the big picture, but these rolling swings happen a lot. That opening move that happens each day is often a lingering fib from the previous day, the second half of the day that didn't fire. And I forget about those a lot. So this morning was a nice reminder of those, which is this target right here. So another good idea at the end of the day is to check on that. Or if you're, evaluating stuff in the morning and preparing, is taking a look at the end of the day previously and see, if there's a bullish or a bearish setup that didn't finish, but it also didn't eliminate itself and still active. All right. So does anyone have any random stuff on their mind they want to bring up before I start going to these questions? And then hopefully these questions will open up some stuff that you guys need to, because next week the groups are gonna be separated, and I'm gonna start all over again with the foundation. So
I got a
get
quick
random
platform
questions in
related
today.
question.
Yeah.
Is there a way to disable the auto scale on the indicators on the chart?
To keep them in the range.
Yeah, so like when
Yeah.
I start them up every day, I gotta run through them. Like if I have like a 4 hour count or whatever on a 15 minute, I gotta disable the auto scale on them. So I'm just wondering if there's a default to disable it.
Yeah, there is, which is manual scale right here under price
Okay.
scale.
Okay, I got you.
So right click on the chart
Yep.
settings, and this is all of your like functional settings, like to make it
Okay.
however you want. You can even show your orders on it, everything. You can say, oh, the hotkeys up, there's a million of them. But they even have time scale and price scale separate, so you can customize each of those differently. But yeah, I keep mine on manual too. I hate that. What you're talking about.
Oh, that's good.
Does anyone have questions on the regarding the chart? I know is I don't even know how to say your name. Is Cool Cow? She here?
Yeah, why does my laptop zoom in on the y-axis instead of the x like my PC? So I haven't figured
I don't
that
think
out.
she's here. I was gonna go over some chart stuff with her. Any other chart stuff before I go into these questions? It seems like you've been using it more and more, Frank.
Yeah, I mean, I use it every day now. Lately, I
Yeah.
have been. So
With the footprints.
with the footprints are a big like. I like them and they make sense to me. So using them with the footprints and then so like on one chart, it's a 15-minute footprint chart, and then I got the what counts do I have? I have the 15-minute because I know Kirby mentioned it the other day and I was using the one on the fives. So I added the 15-minute channels to that. And then also what's the other one that I have? And then the 4 hour on it. So now on that footprint chart, I got the 4 hour counts and then the 15-minute to reference. So I don't know, it helps me.
I'll probably see if you want to do a footprint class sometime, because I know Hank's been asking about some of that stuff, and a couple other people have been asking me to do it too. But
Yeah,
I
for sure,
think
man. Just let me know and I'll jump on here and take care of it.
sweet. Also, if anyone's using the Flowtrade, I have a new divergence tool that me and Trax are testing that has these regression channels built into the flow index and into price, so that it's plotting divergence ahead of time. I guess you can see it right there. Can you see on the chart? I kind of made the opacity 0 because I didn't want the lines over candles. It was bothering me, but it instantly will plot the divergence when it's there, even if it's a small one, and it's been super accurate. So, but I haven't done any time frames besides 1 minute. So if anyone wants to test it, let me know afterwards and I'll give you the file and you can load it in.
Well, yeah, cool, man. I appreciate it.
Okay, so let's start with I wanted to start with Lucky's questions. So where are they? Is he here? Are you here, bro? Yep, he is. Okay, so he said, coming into the day with, I don't think I'm coming into the day with bias, but like today, I anticipated the market was going to continue up from yesterday. Then at least would maybe be 50% area low, August 18th, 14th, or 24th, 50% would be blah, blah, blah. Or if you have any advice on this. Okay, so this is, so basically he's asking about coming into the day with bias. He also asked, the next question is different, but so as far as bias, that's the whole premise based on for me what I do and what I'm trying to do as far as coming into the market and knowing what's happening. So I'm doing that based on the big picture tools that we've talked about and used. So those tools that I keep telling you about or talking about which are the flow channels, fibs, the MACD cycles, and then obviously like flow index algos in the 50 and 200. So when I'm creating bias, it goes like this. I'm starting at the big picture because that's what matters, right? We have all this action throughout the day sometimes, and it's just spinning us around. It takes us all over the place, and we're chasing candles. And then we step back after the market's over and we look at the big picture, and it's like, oh, it's doing exactly what it's supposed to be doing. And all that chaos just confused me, took me out of the game. And that's what they're trying to do. They've got programmers from MIT and everyone else on human behavior, and this entire thing is designed to fuck you, dude. So you have to step back and get a bird's eye view of everything. And so that's what I'm trying to do every day. And I'm not perfect at it, obviously, but every day I try to reset, take a look at what they're doing based on those things. And those things, and the reason behind those things is, one, we need to know what cycles we're in so that we know where the wind is blowing. Is that at our back? Is it blowing against us? Where the strength is? And two, the relevant levels that price uses to change trends. Where does it stop? Where does it start? And so that's what I'm using to determine my bias. Not news, not media, not even ER. None of that stuff affects, even though everyone thinks that it does. If you turn the news off, if you turn the media off, if you turn all of that shit off and you never take a look at it, and you just followed the technicals on where they're supposed to go, price will follow those technicals exactly how it's supposed to go. They don't just randomly do something sporadic and change what they're doing. And all of that noise that comes from media and everything else comes behind the technicals and moves along with it. I have theories behind that, but it's just how it works. So step one for me, which is, so Bucky, or anyone else, I recommend like just take notes on the process for what you need to cover when you're preparing. And that's my first step is I'm gonna draw a trend or fibs. So I'm gonna look at big picture on the daily, 4 hour, 2 hour, whatever I need to get a big picture look. I'm gonna draw my fib from the trend. And so I ended up with one right here, this giant golden pocket from this huge move up. After this trend broke, I'm measuring that trend since we're retracing. There's my big picture fib on it. So I know that direction. I have FT50, my weekly, daily tops, whatever we touched last, etc. And so I'm evaluating based on that. And so, which is why I was kind of frustrated with myself the other day. We came down the whole process, did everything perfect. We landed on the weekly mid, which is also the 50% there. But me, I happen to just like let a little noise from like external things, media, just stats and whatever kind of get in my head, which skewed me from what I already knew, which made me my bias during the day a little warped, and I didn't commit to my positions like I should have. And so that's the kind of shit that frustrates me, because that's like my main focus now. It's what, so there's two things that took me from being profitable um to winning and succeeding, to getting to the point where I feel like I could just print 5-10K a day if will now. And that's, one is the big picture is my focus in trading. I'm not scalping, $200-300 here. That's not my objective. That's where I started, but the big picture direction is my focus, and that helps me trade during the day. And second is my consistency with the same tools and same plan and same process over and over and over, so that I know that it inside and out. And those two things are the main two things. So big picture fibs, big picture cycles, big picture channels. So the next thing is this, and this is probably the main thing that you guys probably are lacking or don't know how to process or put together quite yet. It was the longest thing for me, and that's understanding the cycles and their strength and whatnot. And I can tell because I see people calling, we're going to this price target bullish, blah blah blah, when we have a daily and a weekly MACD, cross down, and even a 4 hour. So I'll say the same thing I said a couple weeks ago when it first crossed down. Price cannot sustain a counter move on those. When the weekly is crossed down, when the daily is crossed down, the price makes a bullish move. It cannot sustain that move. The most you're going to see that move push for is a day, probably a day. If the 4 hour kicks around and pushes it, then you're going to see it push for a day, maybe a little bit longer, but that's it. Other than that, it will not sustain any longer than that. And so that's important to remember as far as when you're holding stuff, when you're I know that every single one of you this week has jumped in a trade chasing price, then price bucked on them, went the other direction. They turned around and chased it back the other way. I guarantee that you've done that this week. And that comes from not understanding where the wind is at your back. That comes from not evaluating the big picture and not knowing those retraces that go against you are only temporary. Does that make sense?
Yes, that's here.
Yeah, it does.
Okay.
Getting
So when you're putting your bias together, Bucky, don't look at these. I know that you have experience with a lot of other tools, and so that's harder to shed some of those things, but don't look at all these other things as far as assuming where price is going to come back to, or taking a guess at, what's going to happen, because you don't have to do that with these tools. You don't have to guess. You don't have to assume or take a snap at anything based on what's going to happen. You can literally know where it's going by using these levels. And so what I think you should do is, I think you should prep in the morning. Is he even here? Okay. So what I think you should do in the morning when you're prepping, or even the night before, prep the big picture out and send it over to me. And then we can chop it up and discuss about it. Like, okay, you missed this part, or you missed that, XYZ. I'll literally, you can do that with me every morning. Like, I don't care. It takes 5-10 minutes at the most. Anyone can do that. That way you're understanding it, and you're understanding what tools to use instead of rather looking at, situations, whatnot. Like, are external situations important? Yeah, absolutely. Jackson Hole, FOMC, those all matter because they delay or they're used as accelerators or whatnot. So yeah, we have to pay attention to them, but they don't take away from what you're evaluating as far as the charts. You have to beat that into your mind. Everyone does, so that you can win. Because otherwise you're stuck in their game. You're stuck in the trap that comes along with trading. What indicator is that?
If you're looking at which I'm doing right now,
I can't hear him. Can you guys hear him?
No, we cannot hear him. There's lots of breaking.
Yeah, it's hell staticky.
Can you hear me?
Pretty choppy. You can type if you want. So going into today, what about walking through? What about a walkthrough now for what you expect? Okay, perfect. That's literally what I was about to do. All right. The problem is my stuff is a little different on here than. Can somebody give me the TOS daily bottom on ES or Trading View, and
I
just
can
let's
get,
just
I
see how
can
it
get you,
goes.
I can get your training view.
Okay. I've been pretty much matched up with Trading View, but not TOS. on here all the time, so I just have been double checking.
I'll DM it to you.
Yep, waiting. You could just told me. 4393.
4393.50 is the 1.5. 4367 is the 2.0.
So we just tap that. 4367. Okay. So starting from the very big picture. So real quick before I go into this, you understand like how price moves inside the channels, right? We go ping off the top, we go to the mid. If we hold the mid, we bounce and head back to the top. If we break the mid, we go to the bottom. If we are out of the channels, we come back in the channels, then we retrace to the channel that we just passed, testing it for support or resistance, and then move to the next level. So that happens on every time frame, over and over and over and over. The bigger the time frame, the bigger and slower the move. And so right now we have this big weekly inside bear shot that's happened. Back down to the weekly mid, bounced up and got jammed by the FT 50 daily. So this is the daily 50, and right in the middle of the FT is where a simple moving average 50 would be. And it looks like price stopped right there. So also that happens to be the bearish guy. This happens to be the bearish fib. So from this low going up to this high up here creates this bearish pocket right here. So starting with the channels, we have an inside bear shot. We made our way back. I would expect us to go back to the mid or to the weekly top. The mid would be first, but we got stopped by the 50, which is a relevant turn. So that's our last turn. So we've rejected that. So we're heading back to the next relevant level, which would have been the 50% here. So nothing could stop us till the 50%. We broke through that. Nothing could stop us till we got to the daily bottom. The daily bottom's where it seems to be where we're sitting right now. And we landed inside of it. So I'm going to prepare for both sides of this, because this is the current relevant level that I'm dealing with. I need 4-hour bottom here. Can you grab me the 4-hour 2.0?
Trading view or
Yeah, trading view is fine.
2.0 is 4383 and 4394 is the 1.5.
4383 is the 2.0.
Yep.
Okay, so we didn't break it.
Nope.
Good to know. All right. So these are the critical levels that I'm dealing with right now. And so when I'm preparing, I'm going to prepare for both of these. So if we bounce right here, where am I headed? The first level I'm going to test is going to be the 50% from the swing. That's the next biggest level. And if that, then we go retest this. So I understand the range is there to the upside as far as those levels. And then I'm looking at the breakdown here. So if we fall out of the 4-hour bottom, we're going to tap the daily 2.0, 367, then the weekly mid test again, which is going to be I can't even grab it, whatever, which is going to be a huge test, right? this test is going to determine a lot of stuff for the market right now. If we break this, then we're going to have everything cycling down to the weekly bottoms, which is going to be big. That's going to be 4,200 level, which happens to be some numbers I've been hearing people call for is 4,200 before we climb again. So that's planted in my head. That's key. If we break this level, we're gonna enter a gap where there's not very many relevant levels. We're gonna accelerate. We're gonna dump hard. So tomorrow, like, I'm gonna have a plan for both of these because of these levels. I hope you understand what I'm talking about based on these levels. If you don't, then just I need you to tell me. The second thing is this. The MACD cycles right now is giving me my bias. The 4 hour, the weekly, and the daily are all down. And so that means everything from the big picture is down. And so even though we landed on this critical level right here, the daily bottom, 4 hour 2.0, I'm going to be expecting that we break down tomorrow. I'm going to be expecting that we lose these levels at some point and test the weekly mid. If I'm wrong, it's okay because I still am prepared for what happens if we don't. But I have to commit to analyzing everything based off of the high probabilities of all the tools, no matter what. I can't just deviate from day to day randomly because then I have no consistency in what I'm looking at. I can't evaluate things perfectly. So no matter what, I keep the same process all the time. So we have the wind blowing down. It's super heavy. And I'm looking for this to break down and accelerate down. I know the main levels right here if we break down. So when I'm trading during the day, intraday trading using the fives or whatever, I'm using these as my destinations throughout the day. If we get down to boom, we land on the daily bottom 2.0 during the day. I short something down, then we get down there. I know that that's the potentially could be the bottom for the day. So that's how I roll these levels into my 1 minute chart is I'm paying attention so that we don't just run into something during the day and it stops and we turn around and I don't know what's going on because I was bearish bias. So these levels are for you to monitor when price is going to turn, when it's going to stop and whatnot. And so that's my plan for the downside, straight up. If we leave the 4 hour bottom, obviously, whenever we leave the channels or re-enter the channels, I'm always looking for price to retrace and touch them. So which is the simple ABC pattern on everything. We break down, we retrace, we hit, we move wherever we go. That's the pattern I'm looking at on the channels every time, whether we leave the channels or whether we re-enter the channels. And pretty much that's the pattern on everything when you're taking entries. Support becomes resistance, broken resistance becomes support, et cetera, et cetera. So you should always look for that rather than just watching price blaze through levels and chasing it and then it comes back just to simply do a retrace and test that level. It spins you out. You don't know, then it's going the other direction. You have no clue what's going on. So exiting 4 hours, I'll be looking for that bear shot, or I'll be looking for that same bear shot on the daily bottom right here. So these three levels could all give me that strong bearish entry. So if that entry happens during the day, those are why I'm comfortable taking 50 contracts, 100 contracts on SPX, because when we break these levels, it's a big deal. It's not just a flimsy 1 minute, Flowtrade pivot level that we just broke. This is a massive level. So if we break this during the day, I'm gonna hammer this thing with a heavy position because of what kind of level it is. And that's how I approach all those things, by understanding that. And so that will be my plan to the downside. Each one of these levels, I'll be looking for nice entries off them. If that doesn't happen and we're going to the downside, then I resort to the 5 minute and 15 minute channels and intraday fibs for my entry levels. And I just pay attention to those. So if we don't, and we bounce in the morning or at any point we bounce right here, then since the wind is out to the downside and since we'll be basically running uphill, I'm not going to be trying to take heavy positions and trying to lean into things and go hard on anything like that. When we're counter trend moving, I'm going to resort to the 5-minute channels, and I'm going to play tight range and tight trades inside those. And I'm going to take profit early. I'm not going to hold on when we hit targets to see if we break through. I'm going to be very crisp on in and out, in and out, in and out, because when you're counter trending, is just like this, right? We have this grindy move up. We moved up. Oh, it's parabolic move. No, it's not. It was a shitty move up. And then what? As soon as everything rolled over, it got annihilated and dumped fast and hard. So that's what's going to happen every time we stall out on a counter trend move. If we're moving up, we stall out, algo sell, cycle, intraday cycles roll down, and we start to cycle down. It's going to be a fast move down. It's going to accelerate to the downside fast. So you have to expect that. You have to, that's part of something that stays in your bag that you understand and you know what happens. So there's my plan based on this move coming in, rejecting the 50. We couldn't get back over it, which is what I was talking to you about. Essentially, this is just a close-up view, but what did we do? Oops. We went through the 50. And then we came back up to test it. What happens if we come up, retest it? That's an entry right there, right? So that was a solid, strong entry that anyone could have had on the daily 50. We retraced through it, basically a bear shot on the 50 right there, which is what I should have actually done. So that's big picture wise. And this is, there's a lot of action right here. So this is just telling us the big picture. So when I roll now into this, I usually have my levels on here already, but I took them off. So here. So I will take my levels and make sure they're on my 1-minute chart. Cause I don't, the big picture chart that I have is just for preparation. I'll glance at it during the day, just whatever, make sure I didn't look anything, but I stick to the 1-minute and 5-minute chart all day for the most part. I don't really look at anything else besides glancing. So I'll make sure I have all my levels already mapped out on here. 4391.
I have a question.
Fire away. 436.
If we get above, let's say we get above the 4-hour top and the daily mid tomorrow. So me personally,
The
primary-
4-hour top.
no, sorry, the 4-hour and daily bottoms. Sorry, the 1.5s. We get above the 1.5s and we get back in those channels. Are you automatically looking for the next level up? Or like for me personally, like if we show some strength and we start like hitting the 15 tops, busting out of the 15 tops.
Wait, so can you slow down, dude? So if we hold the daily bottom and the 4-hour bottom, you said.
Yep.
Okay. Can you tell me the 4-hour 1.5? I didn't put it in there. Sorry. And then keep going.
Yeah, it was 94.
94. Okay.
Okay, so we hold those levels.
Okay.
But obviously primaries are still down heavy. Are you automatically then looking for the next level up? Or like me, if we hold those levels, even though we're holding them until I see like the 4 hours start to turn up, I'm still gonna be looking to like short the 15 tops. I'm still gonna be looking for the wind, to push us back down and not have a lot of strength on the lower time frames. So are you playing it that way where like you're seeing us, start to hit, maybe some higher levels on the 15-minute, 5-minute? Are you saying, okay, even though we held support, the wind is blowing against us and it's going to push this down at some point. So I'm going to be looking for maybe a more aggressive short entry up here. Or are you saying, no, you know what? The 15 is strong. I'm going to try to push to the next major level I see, even though the primaries are against you.
I do the same thing always. I trade with the cycles. So if we get a 15-minute top and we enter a down cycle, intraday down cycle, then I'm going to trade it down.
Right.
I never get to a level, and just because we're at the level, I take an entry. I never ever do that. That's how you get destroyed. So regardless of the big picture strength and where we're going, if I'm setting up to take a short off the 15-minute top, then we need to, the 15-minute needs to be crossed down, and the 1 and 5s need to be, either on their way to roll over or rolling over or crossed over, right? Like if we get to the 15-minute top and that shit's up, I'm not touching it. So that all those things matter. But I'm taking into consideration what I said as far as the big picture, right? I understand for the market for the day, the strength is to the downside and what's happening on the upside trades. I know that they could be choppy. I know that if there's acceleration, it's going to be thin. I understand because of where the strength is both directions. And that's what you're using it for, right? Rather than just trading and you shiny candles are moving and let's running, I'm gonna grab it, not having any clue that what's going on. And that's the point. So as far as like, I guess that answers your question, but even if we hold that daily bottom, right, the 4-hour bottom, so here's the 4-hour bottom, and then here's also a forward fib, which is off of this reversal. So the 4-hour bottom sits right on the 50% conveniently. So that's going to be key level. So I have my big picture levels, and now I'm breaking things down for when I'm ready to actually execute. I have this fib, I have my big picture levels, and so I need to mine these as I'm trading. So I already have this bias, right? So I want the downside, I want to break down and whatnot. And so tomorrow, I'll run through a few scenarios here. So let's say tomorrow we open up, we're about to open, and this is where we're at right here. Actually,
So I guess just to elaborate on that, would you ever try to push? You would never try to like push out of the 15 tops hard tomorrow, right? With on a day like that where the primaries are down heavy.
what do you mean? If I take a trade from like the 15 bottoms and the cycles are lined up and we're ripped to the 15 top, I'm going to take the profit at the 15 top because of the big picture is down. I'm not going to,
right.
if I'm counter trend trading, I'm not trying to like be extra
hard,
and
right.
get extra. I'm just very, very strict and not trying to max things out. If I'm trading with the trend, then yeah, I'll try to go for those. But regardless of the trend, there's the intraday cycles that I'm not going to fight and go against either. Is my point I was making. Which kind of like what we were talking about and what I was saying to you earlier, that you might be like skipping once in a while when you're evaluating, just like in the heat of the moment. And that's the hardest thing about everything is the heat of the moment comes and we're ready to take trades and do our thing, but we lose track. Like it's like Mike Tyson saying you have a plan to get punched in the mouth. Like it changes, your mind changes, your emotion changes. Like it gets harder and you lose track of what you're supposed to handle, what you're supposed to look at, and et cetera, et cetera. And so you make mistakes that way. That's what causes the mistake. So if something's happening and not working right, then you need to go back and be like, okay, step 1, step 2, step 3, step 4. Okay, this is where I missed. Because if you follow all the steps that I say to follow, you won't make a fucking loss. You will not take a fucking loss if you check off everything that I tell you to check off. And I bet my family and house on that. It will not happen. The worst case scenario is price will go in the direction you wanted it to go, and then it'll fade out. It won't be a big move. It'll be a shitty move and just move a little bit, and then it'll die out. That's the only thing that'll happen. Never in a situation where you get in with all the things lined up how they're supposed to be lined up and the price just randomly go the other direction. It will not happen. Period. Okay. So tomorrow, first scenario I'll go over. I'm biased to the downside based on my evaluation, but I'm prepared for both. And let's say we're about to open up. We have a 15-minute cross down. So basically the 15-minute cycle is our intraday strength. Like that's the train that we're not going to go against. We're going to ride that train whatever direction it's going. And so the 15-minute is down at the open. But we have the 1 and 5 minute up, and the algos are up, and boom, bell rings. Here goes price. Bing, bing, bing. Fucking things ripping. Everyone's bullish. Oh shit, price is blasting through. I'm not gonna change and be like, oh shit, we're bullish. We're bullish. No, I'm gonna be like, okay, we're bearish. Where are we gonna stop? Are we gonna stop at the 4-hour bottom right here? Are we gonna stop at the 15 top? Are we gonna stop at the 50% or the 618? I'm looking at all of these levels to see where we're gonna stop. And so I'm going to be watching it the whole time. And let's say we go up, we, break through the 15 top, and everyone's getting crazy and they think it's bullish. And then we start to stop right there. And then come all the way back. That's what I'll be looking to happen based on the big picture. Does that always happen? No. So even though this is going to be a lot for you to remember right here for anybody. So even though, boom, this is going up, I'm still looking for a bearish move. And we get to this right here, 15's down, the 1 minute starts to cycle down and the 5 cycle down. Boom, I'm in my entry at this turn. I'm not going to stick around. If we bust through this, I'm not going to stick around and wait around, whatnot. I'm going to cut it and take my loss without thinking about it, without looking at my profit, without hoping, without being bummed out that I was wrong. I'm just going to take my loss because you have to. That's the game. That's what you have to do. So I take my quick loss, whatever, if that happens. Otherwise, I'm in my entry right here. We roll over and we start to dump. I'm still going to fib out this opening move to make sure I know where this 50% is and whatnot. I'm still going to navigate and treat the trade and monitor it like I always do every single time. Once it breaks that level and starts going, then I get more confidence. We start breaking levels, more confidence, more confidence, more confidence. Now we're at a new low and we have everything down and we're following the plan that I had, and it's committed following the big picture strength to the downside. I'm holding my positions here. Like even at this is me personally, you don't have to do this, but even at the 5 minute bottom, we bounce there, we retrace back, it shaves 1,500 off of me. I'm still holding because I know we're going to do that. And I'm trying to take a bigger chunk and get the bigger move to the bigger destination target, which would be the daily 2.0, or I don't remember what it is, but the big picture level that's next. So that would be one scenario. We could have a scenario where shit just doesn't go my way. The 15 minutes crossed up, the 1 minute's, getting ready to cross up, the 5 minutes up, bell rings, bing, bing, bing. We run, we stop right here at the 4-hour bottom and we start to come down. It looks like we're coming down, chopping around, whatever, and then we start breaking shit, and then we break this and we start climbing up, and we're having a stronger counter move than what's normal. That happens. So when that happens, I'm just a spectator. I'm not trying to do anything. I'm not trying to chase or whatever. I'm just waiting, because at some point we're going to hit a big picture level again, and we're going to smack it, and it's going to come racing back down, and it's going to stay true to whatever the real actual trend that's happening on the big picture is. So that's a difficult thing during day trading. The other move is we just head straight down at the at the open and dump, and I find a good entry, whatever, at it. The key is to understand what's going to happen both ways, and to be able to respond when the heat is on both ways. Because if you're not, and you're just trying to think in the heat of the gunfire firing at you, and you don't have things planned out already, or you don't know, you have no idea where this move is going to the upside, you have no idea where this is going to the downside, you're just guessing and hoping to get lucky. You can't react emotionally and mentally unless you have years of experience, like, without knowing what's happening. So your brain and your emotions need to be prepared for whatever they see. This is fast. Since it has to do with money, it's exhilarating, it throws your emotions off. So you need to be able to naturally muscle memory respond because of your preparation to what's happening, rather than just try to figure it out as it's going. And that's what a zillion traders, that's what I used to try to do. That's why people try to do when they're first learning, just figuring it out. And even still some veterans that try to do that and figure it out, and they have mild success, and that's why they have mild success. So there's a lot to getting to the point where you can be like completely biased and confident in your bias, and it's taken me time too, right? Like, this is year 9 for me, I think, and every single year is another, level of awareness, and another level of strength and confidence and whatnot. It just continues to grow over time. There's no magic switch that one day, next Thursday, it's all going to come together for you. The switch is on and you're just going to start printing money. That's just not how it works. It's just like any intricate skill that you have to develop that just keeps developing over time. It just keeps developing. But if you do things the right way from the beginning, you can start making money as you're developing. But the confidence comes from repeating this process and seeing it happen over and over. I can sit in those positions because I've seen it happen so many times that the probability is just too high now. It's like I've seen it happen. I know what happens. I know how it works now. So hopefully that answers some of your question. I know we're going to be talking about that a lot more, Bucky. So
Hey Josh, I have a question.
yeah.
So you're taking the trade on a 1-minute chart, right? So how many ticks do you wait for the reds to take in the trade?
How many ticks?
Yeah, like you immediately take on a 1 red tick, or you wait for 2-3 ticks and see if all are red and then take the trade.
It's a checklist for me. So it's a different each time, right? So let's do this one right here. So I have a series of things I'm looking for. One, I tell you all the time, I need the 15-minute cycle going in my direction. So one, if that's taken care of, boom, that's off the list. I need to see algos buying. That's 2. And then I need to see the 1 and 5 minute cooperating. Either the 5 needs to be sloped and working on a cross up, and the 1 minute's, slope and crossing up or crossed up. But this process happening, right here, of it's sloping and starting to cross up, you have to watch this happen. You have to watch it go from bearish to bullish, or bullish to bearish, so that you know when it's changing. So I'm watching this so that I know when the process is changing. I'm not just like glancing at it, oh, it's crossed, it's time to go. No, I'm watching this so I can anticipate and interpret when it's happening. I want to be ahead of everything. So that's what I'm looking for on those. And then I'm going to decide ahead of time if I'm, based on if it comes down and breaks down, am I grabbing the the 50%, the 618, or whatever level it is, at some point, I don't put limit orders in. You can do this however you want. You can set a limit order there, however you want to take the entry. That's not how I do it. I get in, I watch everything develop. As soon as internally all the things line up for me and I can see them, boom, market order, I'm in. Because I'm taking trades off of a turn and I have a target and it's big and it's a amount of range. I'm not concerned with a point or two in either direction. Like, it doesn't matter to me. So I even take market orders on the SPX option entries. So wherever I'm entering, the culmination of those things that I'm looking at to enter, and as soon as I see that the support is established, right? This one is fast, right? We come down, boom, we got one wick down here. We have no candle meet. It's just a wick tap. And then boom, we have a blue candle right there. The slope's up. You can see the line down, the slope's up. Let's assume the 5 is up already and the 15's up already. As soon as I saw this blue candle right here, I would have went, bing, market order. If you wanted to sit in here and, you know, that's the level that you're confident in the direction and you drop a limit order right there and play it that way, you can, but it's just harder, right? You put a limited order in, it's ahead of time. So you're not responding to the action that's happening. Yes, you can do it, but also it puts a
Get
little more
burned a
pressure
lot.
on you and you have to, you know, maybe have a stop or whatnot. That's a personal choice on how you want to enter. I'm not going to tell you to do it the way I do it as far as that, but I personally like to see the things develop and I like to manually do it. I don't want a limit order waiting and then I'm watching for the limit order to get filled and then things develop and then, oh, a spike comes down through my limit order, past my limit order. I personally just don't like to do that.
Yeah.
Great, thank you.
I think the hard part for a lot of people with that is, especially when you have a small account, you take it, it's a balance between, like, you're taking it a little ways off the level then, right? And even like 2, 3, 4 points off the level, that's if it turns around and the level cracks, that's more of a drawdown, right? But I guess if you do it like you said and you wait for everything to be checked off, your probability is going to be so high that you have the confidence to where that won't matter.
So this says can you look at SPY yesterday on TradingView?
Yep.
Like around noon,
What time frame?
just 1 minute on 5-minute Kelts.
Yeah, that's what I meant, kill time frame. Do you mean
Well,
today?
I can touch on this differently. I'm willing to bet, Bucky, that there was probably a big picture level there or something else that stopped it from getting to the 2.0 bottoms. I don't know, but if something doesn't reach the entry level that I want, then I'm just not going to take it. Like, you have to be okay with accepting, okay, I missed that trade. Things didn't work out that trade. I'm not taking it. I'm going to pass on this one. It didn't hit my level and whatnot. Because it happens, right? There's still randomness and nothing's perfect. So I would say there was probably something there that you didn't see. I'll look at it later, just to double check. But if it doesn't hit your level, don't take the trade. Plan your trade, plan your levels the same every time, even if once in a while it doesn't hit that level. Price always is going to always offer you trades off the 5-minute bottom and 5-minute top every single day. If it doesn't hit it one time, I would just let it go. Is Big Cheese in here? No, he's not.
Said he was gonna be.
I know he wanted to talk about MACDs.
Hey, Paul,
Yeah.
Hank here, right? Paul,
Mhm.
you earlier mentioned that there was, and I'm sorry, my mic was off or something wasn't working. You mentioned earlier that you had this new flow indicator
Yeah.
that was giving advanced alerts. What is the name of that indicator on
No,
the
I need to
chart?
give you the file so that you can load it in.
Oh, and can you show how it looks like? Oh, these standing red and yellow, green
Yep.
lines.
Hang
That's what
on.
it is.
So basically, we added, this is Trax Advention, and it's actually great because the divergence alert thing on the web version, pretty good, but it's based on something that's not very, like, doesn't produce enough of them. It just randomly picks them. But so this is putting a regression channel on the flow index, and it puts a regression channel on price. And so you have two different ones. You have a short period and a long period, or fast and slow. I have the colors hidden right now, so you can't see them because it gets a little too clustered with having all these lines on there. But basically, it's creating divergence alerts based on the two regression channels, and it's been spot on. You can create the length of the divergence, if you want to just alert big ones or short ones. But what I like about it, which is what we've never had, is it alerts the second that it starts. So the second the divergence initiates, it's going to let you know, and then it's going to let you know as it keeps growing and whatnot. So it can be way ahead on it. But yeah, I'll give you the file for it, and you can add it.
Two questions. Is it like something that comes and goes away, or once the divergence alert comes, it stays?
Oh, it doesn't. Reprint, you mean? Like
That's the right word. Yeah.
repaint?
Reprint.
Yeah, no, it doesn't
Re-
repaint. So
Okay.
because there's a certain size for the regression channel, right? So
Okay.
it's not going to create a regression channel down and then all of a sudden up.
Okay.
um, the cloud question, Keith, that you asked me a while ago, that I never got back to you on, is so like you've been around long enough that if I was telling you to trade the cloud, I would say go for it. Like the cloud is a tradable level. Like I use it and trade it all the time. The purpose of me telling people that it's a no trade zone is when they're first learning. That way they can understand the flow of channels of bouncing back and forth and whatnot, and they can stay safer, right? They can trade inside the clouds. Once price is outside the clouds, they can trade outside of it, not have to deal with inside of it. But you should be able to understand things enough where it's a tradable area for you.
Okay, that's cool.
Where is, oh, can you go over what to look for in the weekly top 2.0 and the weekly top?
Paul, one more question, right?
ROA.
It's a repeating question probably, but I'm just trying to kind of make it stick in my head, right?
We got one right here kicking off.
Okay. So you mentioned, right, that, okay, you got your fib, your golden pocket coming, and the 1 minute are going your way, or 15 minute is also going your way. Do you want all the three? You want, not I would say you would want, but ideally, the expectation is that all the three are aligned to go upwards, because that was a bullish fib. Is that correct? Like you are expecting all the three and is the signal line that you're talking about that needs to churn up, right? A basic question, very, very basic question, but
Is the
still.
signal line?
Yeah, the white colored line you're talking about,
Yeah,
right?
the fast line
the map.
crosses the slow line. That's
Yeah.
the confirmation of the cycle up. I'm not waiting for that though. That's not, I'm not like sitting there waiting. Okay, the white line is over the pink one. Now it's time to go. No, it's just a tool. Like this is a momentum tool. This isn't a tool to tell me to buy or sell. So when the slope changes, the momentum has started to change. So we're bearish strength down right here. Boom. The momentum has started to change. Still changing, still changing. It's changed. It's going up. All this is confirmation. The crossover gives us a confirmation. So we have a confirmed 1 minute cycle going up. Right?
Correct.
Okay.
I
So-
look at 2 minutes over 1 minute because 1 minute I think so is too fast for me to decide. But
that you can do
if
that. That's
2
totally
sound-
fine.
It sounds okay.
Yeah.
Okay.
I'm want accuracy. Like I want to see like the pinpoint precision. It's just how I am. You can use a two minute. I used to use a 2 minute for a long time, and then I went down to 1 minute to get more accurate. There's nothing wrong with using a 2 minute. It's just gonna be a little bit slower unless you learn how to read the 2 minute, right? If you spend time using the 2 minute, you can see the slope change, and it just might be earlier action on what it looks like for you. But yeah, if you're going to use a 2 minute, commit to the 2 minute as what you're watching to let you know.
No, so I was earlier on 3 minute, but now
See how
I've
good this is,
I've kind of
Kirby?
come down on 2 minutes. So
And as far as the 5 minute and like for all of them lining up, usually the 5 minutes going to like cooperate with the direction of everything. It's just kind of like a domino effect of flow. But there's times when they're all just going opposite directions, and that's telling you just you have no strength and it's not a good idea. It's just not the trade you want to take.
Yeah, I have seen sometimes, 5 minute going down and 15-minute going up.
Mhm.
So what does that mean? So will it,
You
is this
just
a
they're
good
fighting
time
each
to
other,
take?
right? You have
Yeah.
programs programmed on the 5 minute, people trading on the 5 minute. You have programs programmed on the 15 minute, people trading on the 15 minute. So they're doing the opposite things of each other.
Okay. So in those cases, just, just sit and watch, right?
Mhm. I mean,
Okay.
that's my preference.
Yeah. Okay.
Is Susan here? No. So the Celt questions, like the weekly 2.0 and whatnot, I'm just gonna leave those alone because I'm gonna be going. We're gonna start that whole process. So we'll start on that next week. It'll be better than just kind of touching on it right now. Oh, so you're just listening? The TOS and Trading View daily bottoms are the same, aren't they? Are those different too? I think those are the same. I think the only difference is the 4 hour. But I could be wrong. What else? Guys better get your questions in because the groups are going to get chopped next week.
Hey Josh,
Yeah.
do you have like a little cheat sheet of like a check off list for what you're looking for in the mornings, or but does it vary so much that you don't do that?
No, it doesn't vary at all. I can make one. I mean, I've typed it up a ton of times, but I can make one so that's like an actual explanation sheet. I'll do that. I'll get it done
Okay,
and
sick.
post it tomorrow.
Awesome, man. Yeah, I think that would help out because then you can go like you were saying earlier, just you go through the checklist, and if it hits all the points, then yeah, go for it. But if not, then probably hold
Right.
off. Okay, thank you, man.
Yep, no problem. Anything else? You guys are good? Does anyone want to prep anything or look at anything for tomorrow? Otherwise, I'm gonna go eat some food.
Yeah, Nvidia, there was a lot of sell-off today. Didn't expect that.
You didn't expect it?
No, especially, in the morning it went up to 500 and then came back.
I know.
Right.
What did we run into? I think we ran into a fib target.
I was gonna say a lot of stocks kind of tanked this morning. I think Spy did the same thing. Netflix.
Yeah, that's because they ran into all their targets all at the same time.
Nah, dang, all the trifectas.
I know this isn't used a lot, but I mean that SPX almost top ticked its or ticked the 50-day, the 50 on SMA on the daily, and after we hit that this morning, we just collapsed.
Which should be used a lot. It's one of the things that can stop and start a trend.
That's basically the FT50.
Correct. Yes. Yep.
Oh yeah.
That's what stopped ES on this move. I didn't know that SPX hit it because I just
Yeah.
have a little generic SPX chart. But that's good to know. What did Nvidia run into? I'm pulling up my other chart.
Hey, Paul, quick question, right? What is FT50 again is made up of? Primarily is just 50, or you guys call it FT50?
It just calculates
like-
the open and close of the candle in two different ways. So it plots two lines. If you had a simple moving average, a 50 simple moving average, it would be right in the middle of it.
Okay.
So it calculates the close of the candle one way, and it gives you the upper line, and the candle calculates it another way, and it gives you that lower line.
What
So
is
just
I'm sorry, go ahead.
It's so it gives us a range, because the reason why I like it is because I've seen so many times price breach the 50 only to be stopped by the bottom or top line of the FT50. And so it's just basically a safety net. I used to run the simple moving average right inside of it as well. I just don't anymore.
So
I mean,
can we use it on any time frame, like 4
Yeah,
hours?
absolutely.
With the same setting inside, that's like 15-minute and something it says out there.
Yeah, it's literally just like a moving average. That's all it is.
What was NVIDIA split? Was it 4-1 that when they did it that last time?
I don't know, but Nvidia hit the daily 3.5, which is pretty much, I think it's the daily 3.5, which is pretty much the kill switch on, like, the majority of the time, daily 3.5 is going to tap a trend out. That's going to be the end of it.
Because it's in new price, new all-time high price ranges now, right? So
Yeah,
if it
probably
was
is.
4-1, what you'd be looking at 2K pre-split, right?
Yep.
So I mean,
Yeah,
man,
dude,
if I would have bought this in 15,
I'm mad at myself because
on.
I just knew this thing was going to run all year. The shit they're doing is out of control. That's why. Let's see.
Paul,
Yeah.
Hank here, right? Gotta go back to that one follow-up question. Sorry, Frank, if you wanted to ask still.
No, you go ahead.
Paul, going back to the same FT50 question, right? So when you open the settings of FT50, all right, say on a 4-hour time frame, when I install FT50 and I see the settings,
Mhm.
it says 15 minutes on a
Then change it to whatever time
on
frame you want it to be. So these are all multi-time frame indicators, right? They don't change with the chart. Like normal stuff, you change the chart, the indicator changes with it. You're just going to set that thing to whatever time frame you want it to be. Is that,
But on a normal, but in a normal case scenario, if I put a 4-hour chart, I can put the FT50 with as is settings of 15 time period. That
no,
is cool.
because that's going to be a 15-minute FT50 on a 4-hour chart, which you can't do anyway. So whatever you set that to. So if it says 15-minute in there, then it's going to print a 15-minute moving average on the chart. If you put daily on there, it's going to print a daily moving average on there.
And what he meant by you can't do a 15 like FT50 or a 15 Celt on a 4-hour channel with multi-time frame. You can do anything that's bigger, any time frame that's bigger than your candles, but if you do one that's lower than your candles, it's not going to print.
No, that's fine. I get it. This was multi-time. This is multi-time frame. I was under the impression that probably there's some setting that I'm doing it wrong, but it makes sense. Thanks. It makes sense.
Can you guys see this snip that I just put up? Or is it showing you the...
No, we can see, I can see it.
Okay. See this line right here that NVIDIA ran into? This is the 3.5 ATR, the daily 3.5 ATR. This level is your kill switch. Like, that's what I like to think of it as. Pretty much anything that hits it on a run, taps this, lights out. And that's exactly what happened. So this is another big picture, short level entry. And this is why big picture levels are so important, right? Do you know how many people right here are like, fucking, we're going to 600. Ah! And then even on the retrace, we're going to 600. And they have no clue that this is the reason why we started using 3.5 is because I spent some time talking with a couple market makers, and they're talking to me about how things are programmed and how they use, not channels. They're telling me about 3.5 ATR. And they're saying that that's where they sell at. That's where they buy at. And so then I started putting those on the charts. And I was like, holy shit. So that's why it tapped out.
Yeah, normally we do only 1.5 and 2, right? But this is the good one to know.
1.5 right here.
Yeah,
2.0.
and 2, yeah.
And that's daily, right? Daily
Yeah.
3.5.
This is the daily. Yeah. I don't use the 3. Kirby does, and Bond Broker does, and some other people do. I don't use the 3.5 on anything else. Unless we're like blowing out of the weekly and I need to find another level, then I'll like check the weekly 3.5 or something. But I really only use it on the daily because it seems to be the capper on the downside move and the upside moves.
Okay. I gotta go, guys. See you.
Yeah.
Bye.
Anything else before we wrap up?
No, great session, Josh. Thank you very much.
All right. I'll talk to you guys tomorrow. And if you guys are charting stuff, doing it in the morning, getting prepped or whatnot, like, feel free to bug me. Like, that's what I'm here for. So talk to you guys tomorrow.
Thank you, bro.
Thank you.
Right.
Bye. Yeah.
All right, man.
Thank you, Josh.
Thanks. Take it easy.